It took me over 4 years, hundreds of mistakes, countless hours of analysis to discover one truth about trading. And in this video, I will share it with you. Let me save you some time by telling you the biggest mistake I made as a beginner. That was thinking that I could succeed quickly. But trading is not something you master in a month or even a year for that matter. The harder you chase success, the more likely you will fall. Stop trying to get rich fast. Accept that trading is a long-term game. The moment I stopped rushing and focused on learning, everything changed. I thought I was special. I have some natural edge, but here's the truth, I wasn't. And most likely you aren't. The more I lost, the cycle kept on repeating. And the cycle just kept on repeating. It wasn't until I focused on a long-term plan in the next 2 to 3 years instead of trying to make it in a month. Stop rushing. Trading is skill. And like any skill, it takes time to develop. You wouldn't expect to become a professional athlete or musician in a month. So why expect it with trading? The best thing you can do is to slow down. Focus on learning. And yes, use a simulator. I know it is not exciting, but if you can prove your edge in a simulator, you set yourself up for long-term success. Treat the first few years as an investment in yourself, not as a get-rich-quick scheme. But there was another massive hurdle waiting for me, my own mind. I'd make the same mistakes over and over again. Revenge trading, over-leveraging, jumping into trades without a plan, you name it. Next time I do better. But then next time would come and the same mistakes would happen. Eventually, I realized the problem was not my strategy. It wasn't even the market. The problem was me. To break the cycle, I had to ask myself some hard questions. What was I feeling before I made a mistake? What triggered me? Was it greed, fear, boredom? Once I started identifying those patterns, things began to change. One of the most surprising things I discovered was how powerful talking out loud can be. After a loss, I literally tell myself, that's okay. That is just part of the game. Losses happen and they do not define me. Focus on the next good setup. Just speaking those words out loud helps me to reset and refocus, helps me to stay in the game. Here's a key, trading is not just technical, it is deeply psychological. To improve, you need to understand your emotional triggers. After each mistake, take a moment to reflect. What happened before the mistake? How did you feel? What led to it? Self-awareness, that is your edge. Once you know your triggers, you can start managing them, and that is where real improvement begins. Here is something that I wish somebody told me early on. Losses aren't a problem. The real problem is mistakes. And there's a big difference between the two. When I started trading, every loss felt as a failure. Like it was some type of proof that I was not good enough. I avoid looking at them, just hoping that the next trade would erase the pain. But I didn't understand that losses are just part of the game. Every trader, even the best in the world, have losses. They are unavoidable. What actually matters is whether your losses are mistakes. Mistakes happen when you do not follow your plan. Ignore your stop loss or trade out of emotion. That is where the real damage happens. Not from losing, but your own bad decisions. For example, I noticed that my biggest losses came from revenge trading. I get frustrated by losses, ignore my rules, and try to win it all back in one trade. But once I started analyzing my trades, losses weren't a problem, I was. Now I look at every loss and ask myself, was this just part of the statistics or was it a mistake? If it's a mistake, I learn from it. If it's not, I move on. Simple as that. Here's the key. Don't fear losses. They're a normal part of trading. The goal is not to avoid them, it's to avoid mistakes. After every loss, review it. Ask yourself, did I follow my plan? Did I stay disciplined? If the answer is no, learn from it. Fix the mistakes and get better. Trading is not about being perfect. It's about managing your mistakes and treating losses as part of the process. That's how you grow. But there was still one thing that quietly kept on sabotaging my trades: watching my P&L during trading. Let me tell you, this was one of the hardest habits to break. Every time I placed a trade, I fixated on my P&L. You tick up, tick down, and this is what would happen. When I saw profits, I was trading scared. Closing trades too early because I did not want to give it back. I did the opposite, taking stupid risks, trying to recover what I already lost. But here is the thing. Trading is not about chasing numbers. It's about executing your plan. Watching my P&L was clouding my judgment and pulling me away from the process. It wasn't until I turned it off completely I finally could focus on what actually matters. Focus on execution, not outcomes. The numbers will take care of themselves. Stick to your plan. And remember, discipline is everything. And trading your P&L, that's the enemy of discipline. One of the biggest shifts in my trading came when I stopped winging it. Here is the thing. Success in trading doesn't come from improvisation. It comes from preparation. When I first started, I could just watch the charts and figure it out on the fly. I will just adjust when things go wrong. But then the market moves against me and I freeze. Panic would set in. I either exit too early or hold on too long, hoping it would turn around. It was not until I started to prepare my trades ahead of time that things started to change. Now, before every trade, I know where I will enter, I know where I will exit, what to do when things go against me. But I don't stop there. I also visualize those scenarios. I rehearse it in my own mind. How I react when things go wrong. How do I react when it goes according to plan? So when the moment is there, there's no hesitation, just execution. Let's say I'm trading a breakout. I plan my entry based on a specific price level, set my stop loss, decide ahead of time how much I am willing to risk. I mentally rehearse. What will I do when it's just a fake out and the breakout fails completely? What if it moves too fast to manage it manually? I prepare for every scenario, so I'm never caught off guard. Here's the key. Never go into a trade without a plan. Where you exit and how you will react when things go not as expected. Don't stop there. Visualize it. Mental rehearsal prepares your mind for the real thing, and that keeps you calm under pressure. Remember, markets rewards discipline, not improvisation. When you're prepared, you're confident. And when you are confident, you'll execute better. When I started trading, I had one number stuck to my head. Win rate. I thought the higher it is, the better trader I was. But here's the thing. Win rate is completely overrated. I used to be obsessed over my win rate, aiming for at least 60%. And sometimes I was even hitting those numbers. But you know what? I was still losing money. Why? Because my losses were bigger than my winners. 2 bad trades could wipe out weeks of profits. It wasn't until I started focusing on my risk to reward ratio that I realized what really matters. Instead of trying to win more often, I started working on winning better. That's meant keeping my losses small and maximizing my winners. And suddenly I did not have to keep a high win rate to be profitable. Here's an example. But imagine you only win 40% of your trades. But every win is twice as large as every loss. You are still profitable over time. Now flip that. If your loss is twice as big as your wins, 80% win rate will not save you. Here's the key. Forget about win rate. It does not matter how often you win. It's all about how much do you win when you're right and how much you lose when you're wrong. Focus on risk to reward ratio and let the profits take care of themselves. Every trader wants to improve. There's one counterintuitive truth. You just need to eliminate your worst trades. For a long time, I was focused on chasing perfection. I thought if I just can make my winning trades better, I'll finally be successful. But there's a problem. My worst trades were doing way more damage than my best trades could ever fix. When I finally shifted my focus on eliminating those bad trades, the ones where I ignored my plan, took unnecessary risk, and emotions take over, then everything started to improve. Instead of trying to be perfect, I worked on being consistent. For example, I noticed that my worst trades always happened when I was over trading after a loss. I ignored my rules, took impulsive setups, and dig myself into an even bigger hole. Once I identified this pattern, I made a rule to stop trading after 11 o'clock market time. Here's the key: your worst trades. That is where the biggest opportunity for growth is hiding. After every trading session, review your worst trades. What went wrong? Did I break my rules? Was it emotional? Figure out what caused the mistake and make a plan to eliminate it. You do not need to be perfect to succeed. You just need to systematically remove the things that are holding you back, and everything else will follow. I thought the more time I spend in the market, the better my results will be. The longer I traded, the worse. I noticed a pattern. Early in the day, I followed my plan, stayed disciplined, traded well. But as hours went on, things started to slip. After around 11 a.m., if I was down, I started revenge trading, taking setups that didn't really fit my strategy. My discipline would fade and my results would spiral down. The solution: I set strict limits. Now I don't trade more than 3 hours a day, including my preparation time. Once I hit my limit, I'm done for the day. By stopping at my best, I avoid emotional decision-making and careless mistakes. Discipline fades over time. There's a psychological term for that. It's called decision-making fatigue. Let me check that. What is the psychological term for decision-making fatigue?
The psychological term for decision-making fatigue is ego depletion. Ego depletion is the idea that self-control is a limited resource, much like a muscle. When you exert self-control to make decisions, you use up this resource.
Just one small note: the theory of ego depletion is debated, but leave the market before your discipline wears off. Know the period when you are slacking in your discipline and take a step back. When most people start to trade, they think success is all about the result, how much money they make that day. But focusing on the results is one of the quickest ways to burn out. When I first started to trade, I measured my success by my profits. A green day meant I was doing great. A red day, I was failing. But here's the problem: even bad trades can make money sometimes, and good trades can lose money. I let my results dictate my emotions, and that was exhausting. Everything changed when I stopped judging myself by my profits and started focusing on my discipline. Did I execute the way I intended? If the answer is yes, then I succeeded, even if I lost money. And here's a kicker: when you focus on trading well, the money will take care of itself. It's a long-term game. For example, I take a trade and I follow my setup perfectly, but the market moves against me. It's a loss. I still consider it a win because I traded according to my plan. On the flip side, if I take a random trade out of FOMO and it works, that is a failure because I broke my rules. Here's a takeaway: judge yourself by your discipline, not your results. Measure success in how well you followed your plan, not how much money you win or lose in any given day. If you focus on execution, your results will follow over time. Trading success, it's not about being right on every trade. It's about being consistent, disciplined, and process-driven. That's what leads to real success. When I first started trading, I thought the goal was to beat the market, outsmart it, predict it, and win against it. But over time, I realized something surprising. Trading is not about the market at all. It's about you. I used to blame the market for my losses, thinking it was unfair. It's manipulation. But the truth is, my real opponent wasn't the market, it was me, my fears, and even my ego. They were the real obstacles standing in my way. I compare myself to other traders, trying to match their success, mimic their strategies, but it only made me more frustrated. The turning point came when I stopped looking outward and started looking inward. Trading became a battle against myself. Every day became an opportunity to be better than the day before. For example, I used to revenge trade. I could quickly fix this loss, but that was just my ego talking. It wasn't part of a disciplined plan. Once I recognized that impulse and learned to let go of the need to win every single trade, my results improved. Here's the key. Trading is you against you. It's not about beating the market. It is not about copying somebody else's success. It's about mastering your own psychology, your emotions, your habits, your mindset. The only trader you should ever compare yourself with is the one you were yesterday. Remember, the market doesn't care about you. The only thing you can control is yourself. Win that battle and everything else will follow. Trading is one of the most difficult challenges you can take on. Not because of the market, but because of yourself. But if you focus on mastering these lessons, staying disciplined, learning from every mistake, you will give yourself the best chance to succeed. And if you're ready to take your trading knowledge even deeper, check out this video. I will break down the patterns and habits, what truly separates consistent winners from frustrated beginners. It is truly a must watch if you're focused on improving. Right there, click on it. Just there. Go for it. See you there. Let's go.